Dudes, we're gonna get right into it because I got a super busy day today lined up for you guys. Actually, we're doing some other filming and moving part of our stuff to a new location, and we got to move a whole bunch of stuff around. So I wanted to have a discussion with folks today, probably no more than a half hour, and we're going to talk about market conditions. We're going to talk about mining when we're looking at a market like right now, where it's pulled back almost 55% from its all-time highs earlier last year, mid last year, and looking at like some of the conversations that people are having around mining, and do they get in, do they get out, when's a good time to get in. So this is coming from a perspective that this is my fourth cycle in this space. For people that don't know, I've been in the crypto space since late 2010, started mining Bitcoin very, very early, and then really ramped it up out of 2012 into 2013, made BitsBeTrippin, and then fast forward, an additional almost 9 years of just taking you guys through that journey. And so I've seen a few of these types of markets, and when people start to freak out about it, there's a bit of perspective that I wanted to try to make sure that people understand. When it comes to the building, you see a lot of folks like myself, or folks like Hut 8, or any of the builders, Marathon, Foundry, Rhodium, all these big builders like in the US and around the world that I don't want to call it business as usual, but we're still building. We're still expanding. We're expanding in this space because we're long on the space that also happens to produce tokens whenever you're mining them, right? There's the innovation in this space is growing exponentially. And let's have a calming session here of not freaking out. So just the amount of noise, the signal that comes whenever you have a pullback such as today, where they break a resistance line, where crypto is holding that 40K, hadn't really dipped into that 30. Now it's at 38, 37. People are like, how low is it going to go? So I put a few different notes out there on Twitter today to explain kind of my perspective, and then just talking with people that do futures trading, that actually put their money where their mouth is at on taking risk and speculative risk on some positions. And right now, from my understanding and just looking at it where it's at, if you look over the last 6 to 8 months and where Bitcoin's pricing was at, there's been a lot of buildup on the DeFi markets to where people can borrow and lend against their crypto. So you got things like Celsius, you got BlockFi, you got all these different options to borrow against your crypto. Now, why does that matter with the market the way it is right now? Well, what happens is when people borrow against their money like that, they take a risk. It's like a hedged risk that you're going to get liquidated after a certain rate. Now, those TVLs are set anywhere from 50% to 35%. So if Bitcoin was setting at $50,000 and you did a loan to value at 50%, you are getting a margin call at 25%, or at $25,000 in that case. So if you look at what that average price, coming up from March through all the way through October, where we were setting around, and it had a couple times where it dipped down to 29. But your average rate's anywhere from that 45 to 55 range. Most of that borrowing that's happened in the DeFi space has really started happening from November of 2020 through 2021, right? So a lot of those positions right now are setting on that 45 to 55K, Bitcoin space. They're setting on that 38 to 4,500 Ethereum space because of what has the liquidity to borrow against, being Ethereum and some of these other tokens. So what that means is there's a where people don't want to get liquidated, right? You're going to get a margin call, which means you have to put up either more crypto to cover your position to then create the equation in such a way that you won't get liquidated. In that example I was using, where if you had $50,000 in Bitcoin and you wanted to borrow against that, at a TVL of 25% or at 50%, that your liquidation point would be 25,000. So what somebody would do is then put like $10,000 more of Bitcoin in right now to then bring up their relative rate to where you're dropping it down to where their liquidation point maybe comes down to $21,000. If you look at that 45 to the 55 range over this last year, that means liquidation points are anywhere from $22,000 to about $27,000. So where is the floor? Now, this isn't all predicated on people borrowing money, but bottom line, there has been a lot of capital pushed up into the DeFi market to where people have taken positions, and there is a not just a normal market force to where when it starts to get that kind of low, you're going to have people covering positions, you're going to have people buying some Bitcoin to put into that position to not lose their larger amount of Bitcoin that they have in there. So it ends up creating a virtual price floor around that $28,000 range. Again, because of crypto being in that 45 to 55 and people borrowing up to 50%, that's you're effectively halving of what that is where their margin call is at. So that's the first part. So that's where, talking to people that are in this space that look at how much stuff is being borrowed against and looking at like, okay, there's virtual floor around 28,000. Now, notice I didn't bring up any charts, any lines. I'm not drawing Bollinger Bands or anything like that. It is purely the cause and effect that occurs when you borrow against margin in that, especially if you do it at scale and you can figure out the price point that somebody had in and figure out, okay, if they took a 35% only risk, then the crypto goes down 65% before they start getting margin calls. Now, those folks are protected depending when they took it. If they did it at 45,000, they're protected all the way down to probably $16,000 Bitcoin price. So you could have this secondary floor establishing around that 21 to 18 range. I don't see something like Bitcoin going down that low right now. I think there's so much institutional adoption that this is, margin desk and people taking risk, taking off of risk when they get that call to, the desk gets the call to pull some risk out of the system. They're going to pull out even if they're taking a hit, and they'll wait to see if it falls a little precipitously further, and then they'll buy back in and they'll become the new floor, right? So you have this behavior every cycle in Bitcoin anyways. It's always been the question and all-time highs of where people get that FOMO and it's sitting at 63 to 69, and you're like, surely it won't pull back. And if you zoom out and you see those that movement that happens in this crypto space, and now again having the fourth cycle of that, it's just it's been becoming a natural cycle for Bitcoin where between halvings it pulls back and people play the game. Where does it sit? Could it slide a week? Could it slide a couple months? The difference is there's a lot more people in it and a lot more opportunity for people to be able to get in. I mean, just this morning, the amount of calls I personally had from people, just from friends and family that follow on Facebook, they're starting to get it. They're like, is this where I buy in? They were holding off around Christmas. It was still a little higher then, and they're like, I'm priced out. Part of those discussions were, well, if you have a pullback, that's when you want to pick it up, right? The psychology of people are to follow the herd, right? So if you have a FOMO activity and people buying in at 45,000, 50,000, starts going crazy, they're in, right? They're not in right now, right? We can see that in the market price. Folks look at it and go, I'm not going to catch that falling knife. How far is it going to go? The point is you dollar cost average in on the way down. Again, not financial advice, telling you what I do. But the psychology is that they're going to just catch it on the way up. Like, I'm going to miss this opportunity at 38, 37, and I'll buy it if it starts going up. Sounds like a solid plan, my dude. But that's just the psychology of it. But let's pivot to mining. I talked about market stuff. Again, I wanted to make this one a pretty quick one because I do have a 1 o'clock my time, Central Standard Time, that I got to jump to. But I wanted to have a video with you guys. So let's get into the mining aspect. Now, most folks that follow this channel, follow us because we do crypto mining with GPUs and graphics cards, be that workstation cards, mining edition cards, and even retail cards. So what happens if you're on the fence and you're wanting to buy into some? Is this the time to buy? And what I say is you look at current pricing on cards. Like, we're even cleaning up cards and putting them through Crypto World, and we ourselves will adjust prices down with the market, right? So where if we had like 4 gig cards, 470s going for $175, $200, those will get priced down to like $125, $100 over a period of time if they just stay flat. Same thing with 8 gig cards. Let's say RX 570 or 580s, 570s, something like that. That might be 225 or 325 right now. We'll go down to 225 or even potentially lower if it sits long enough. That's the kind of stuff you're looking for. You're looking for, if you're wanting to get into mining on the GPU side, you want to see at least a 20 to 30% pullback on current pricing. Now, it's going to take a little bit for retail to get to that. Retail literally has an algebra equation that looks and sees how long something sits on the shelf. And then you got buyers that set, it's a 3-tier system. You got a producer, you got essentially a supplier. So you got the original chip manufacturers, the IOCs, are the ICMs that actually will create the chips like Nvidia. Then they sell those to third-party partners like ASUS and stuff. ASUS will ship to a freight forwarder that will then move it to a wholesaler. There's margin in each of those chains, and then it'll come out to a retailer. Now, retailer is the one that feels it, right? They're the kind of the end of the margin tier, and they're the ones that have to host and set that stuff in the shop and wait for somebody to come in and buy it. So it takes them a cycle. So if stuff sits on a shelf, we've seen this right now with the AMD cards that have been setting out there, the 6900 XTs that were setting at $2,500. It was just at Micro Center a couple days ago, and those are now like $1,599. So they've came down from that $2,300 to $2,500 range on the 6900 XTs. They're now at $1,599. Now, originally, those cards, at least for, and I'm using this as an example, MSRP when they were launched for the base model version of that 6900 XT was $1,000. The third-party partners was anywhere from $1,249 to $1,500, depending on like kind of the setup, if it was a hybrid card or whatever. We're at $1,599 across the tier right now. You would see potentially a pullback down by $250 on that card, and then that's getting really close to original MSRP value for like the 6900 XT. I can't see it going any lower than $1,249 for a 6900 XT. That should drive everything else down the stack, the 6800s, the 6700 XTs, all back down within the next 90 days if pricing holds. You take Nvidia now. You look at the, some of their pricing that they had, where you had like 3060 Ti's that were supposed to be $399, right? Those are still pulling $800 plus dollars. It really hasn't hit the Nvidia cards as hard yet because some of the ancillary algorithms that would be potentially taking the brunt of Ethereum's hash rate when Ethereum would go to proof of stake. The Nvidia cards play very well. Their architectures plays very well for some of those algorithms. If we're talking Flux, Ergo, even Ravencoin, really performing pretty well on those cards. So like if the pivot off of Ethereum, you're looking at the longer term architecture. Like on our farm, most of our stuff that's getting converted is moving over to the Ampere series, which are the workstation cards, over the A4000s and 5000s. Again, Nvidia. I'm interested in the BC160s. The price point needs to come down a little bit. I'd like to see that card right at $1,000, potentially even lower. Right now they're about $1,375. So it's still got about $400 to pull out of market before really a larger order of those are on. Used cards, if you're looking at picking up used cards, the market in general on that, it's again, going to take at least 30 days. This is a blip potentially down to that 38 price floor. If it holds and we get a few days, I'm talking Bitcoin price, $2,800 ETH price, you'll start to see capitulations. Already getting farms. I've had a few reach out to me from yesterday's video, said, hey, you buy farms? Here's my cards, right? So there's already some telemetry I'm getting from that. That there's some people ready to kind of get out. Some of the stuff is older. Nobody that has newer stuff has reached out. You know, it's 470s, 480s on the Polaris side. But you will see if it stays hold where we're at right now, like sub $3,000 ETH price, I can see a flattening of ETH's terahash growth. Potentially, from most of the home miners turning off. Now, what's the percentage of home miners out there on the Ethereum network? I mean, we're going to start to see, especially if we see $2,500, $2,600 pricing point on Ethereum's current pricing, because hash rate right now is almost at a full petahash, right? We're at 977 terahash on Ethereum's network. If we look back a year ago, we were at about 500 terahash, so it's doubled, right? And with EIP 1559, it's really pulled out a lot of that potential revenue in Ethereum's network, short of a few NFT drop spikes that we get, 100 ETH blocks. Most of the average block, amount has moved down from 3.2, coins per block down to essentially 2.1. So 0.1 has been around the average and sometimes lower. So you've had a 33% decrease in total potential yield, in addition to a doubling of the network size in the year, right? So what that means is less. That means either price discovery needs to happen, which it's actually went the opposite way. So and this has been the common narrative. I talked about this in the March discussions with Ethereum, this virtual path of trying to manipulate price by changing the dynamics of the coin that are not set in stone, where they've tried to just we'll create a burn. It's going to be great for the holders. I mean, we're setting at $2,800 Ethereum price. When EIP 1559 came out, it was 3,500, 3,700, went all the way up to 4,900. So 4,800 people were buying the news. And effectively what's happened is the NFT people have sold the event. So I think it goes to show you that miners in general, were not a huge amount of your sell pressure, considering that $9 billion or so have been burned, or whatever the current burn rate is right now. I do have this where I could check the computer, but or check the pricing on a burn. And somebody in the chat could probably show where we're at from a burn standpoint. But that has not been distributed to anybody. So thereby that pressure hasn't been a sell pressure. So where's the sell pressure coming from? You got a 70% pre-mine on Ethereum, and there's a lot of holders, and people are taking positions of grabbing capital. And you have a lot of NFT people that I don't want to discount the NFT folks, but if you're a creator and you made something and you've gotten a windfall from it, you're probably diversifying out of it, right? You're not necessarily whole. You don't become an overnight, I'm into ETH and I'm staying in ETH. You're a builder that's leveraging a network that's put on a new tool set, and you've just made money on it. So you're probably switching that over to where you can have a little more less volatility going into either a stable coin or going into cash capital, and you're selling. I think what Beeple had sold most of his ETH, right, when he sold the $100 million NFT. So we're seeing this with Solana. We see this with all the other NFT networks by and large, where this is just the activity that happens. So, the narrative of miners that uphold the network and secure the network, I think we've been able to reinforce that over the last year, that your huge amounts of sell pressure isn't coming from them. So what's that mean going forward as we start looking at, graphics cards to buy, networks to support? I think it's always going to come back down to what networks can financially support the miner regarding at least ops cost, and what cards make sense to purchase if you're sitting on the sidelines, and at what price. So if there's a line in the sand of original MSRP price, the closer we can get back to that is obviously your target. of what's a good deal or not. So if you're looking at original MSRP prices, 3070s, 3060s, that sort of thing on the Nvidia side, you're looking for that, can you get one for $500? It'll still take time for gamers and folks to be able to pick up GPUs. They're still going to pay a premium right now. So as things come back in, you're going to see a lot of them, maybe saving 20%. But hopefully we don't hold, a flat pricing for, a year plus if we get into a crypto winter. It's just a hedged risk that we all take on. If you buy now on the GPU side, are you paying elevated prices? Right now, you're going to pay elevated prices, so it's going to take a few weeks. But have your money ready and look for your opportunities. Look at your Facebook marketplaces. Look at your eBay's is not as popular anymore. There's other sites like Anadeck Forum and Hard Forums. I usually troll through there and look and see if there's any kind of good deals or somebody selling some stuff. But yeah, if you're on the fence of building, just look and wait and try to make sure you're getting a relatively decent price. I'm going to look at a couple questions here. We're at 21 minutes. I'm going to wrap this up in about 5. I'll look through if you guys had any questions. Let me know, and we'll go through some of those. And then we'll wrap this one up. Hopefully this was a pretty quick, good one. I try to make it concise as possible and keep some structure here. So let's see here. We got, what's your thoughts on Flux? I'm interested. I'm learning more about it on the parallel asset side. Maybe we'll even have a video on it. We'll see what's going on. Michael Anderson, I want to get a hold of some of those red devils you got, Bits. All right, Michael, hit me up on the what's the best way for you to get with me that I'll see something. Hit me on BitsBeTrippin@gmail.com, and we'll see if we can align you through the Shopify when those go over to Crypto World, and we can, because they're handling a lot of the shipping and all that kind of stuff. So Michael is referring to a tweet. So if you don't follow me on Twitter, you should. I tweet a lot of different things. We also now have a TikTok and an Instagram. I don't know why I was so slow to get to Instagram. I should have been on Instagram for years. Would you buy an L7 or an S19 XP if you were to add more ASICs? I have not picked up any of the L7s. I didn't really have access to pick up one quickly and to test. And I'm trying right now to get one of the new S19 Hydros. I would like to show and sample that out with you guys. And we're getting I'm buying a single immersion cooling full closed kit from Fog Hashing. Actually sending that wire over today to get that unit. We'll take you guys through that process of putting one S19 into an immersion cooler that keeps it all super quiet. Good for the home miner. But I would probably go with the S19s right now. Small miner found some 6600 OCs cards for 458. Should I grab one or two? That's still a little pricey. So the 6600 original MSRP should be around that 299 rate. So they're still pretty high. 299 to 349. So you're looking for 399 on the 6600s. Thoughts on Ton coin? I haven't put a lot of time into learning about Ton. I would say run over to Son of Tech's channel if you guys want to see some of that. I know he's been covering Ton. Lifespan of GPUs and optimal temperature. Can't find too much deep info on that. We covered that quite a bit. So we have RX 470 Sapphire mining editions that have been running since 2016. We're doing a full clean through. Actually, the video that's coming out tomorrow is part of our whole process for that, with a voiceover on showing you guys how to do that. You want to tune into this channel, Kamitat, and put it on notification. You'll see that video tomorrow, and I kind of actually cover that on optimal temperatures and lifespans of GPUs. Did you watch any of the mining conversation at Capitol Hill yesterday? We were super busy with a few things, and I have a couple big projects going on right now, so I wasn't unable to watch. I was to watch some of the recap. There's a huge amount of opinion and misinformation, unfortunately, still. But the one thing I will, compliment is at least the government's trying to get more information. And they did have two kind of opposing view sides out there, and that's the best you can ask for. Brooks from BitFury, I think, covered some of his big points pretty well. I think there's just still a lot of misunderstanding, and there's a lot of comparisons that don't really make sense. where they're trying to, it's like complaining that there's bark on a tree in a forest, man. Like they're missing the entire point. And the arguments are not structured as well that I think they could be, but it takes time. Maybe one of these days I'll go over there and explain stuff to them. 1660 Super is still good. They're okay. 30 mega hash cards, low wattage. I would look more for 3060 Ti's on the lower end scale. What about Ravencoin's its network hash rate fell 70%? That is part and parcel of a halving event where you don't have price discovery. So it's going to shift and adjust according to that. So if we have a run up to Ravencoin to get its hash rate back up to around that 10 terahash, would have to get to about 18 cents from where it's at right now. So almost a 10-cent increase. Jacob Burgess, thank you, sir, for that super chat. Thanks for all the great content. Thoughts on pricings on 27s and 2080s. So I actually just picked up a couple of these. So for used 2070s, I'd be looking at a price point around 350 at the max. And then on the 2080s, looking at a price point no more than 500. I know it seems like that's super cheap, but that's what we're from a buying standpoint. If I'm not doing a buying on that, I'm not spending any more than 500 on a 2080. Just because of the 3080s and where things are going. That's from a buying standpoint. If I was turning around and selling it through retail at Crypto World, they would be a little more. They'd be more around where you're probably going to find them at around that 750 for the 2080, 750 to 800. On the 2070s, you're going to be seeing those at 450 to 550, somewhere around there. But like it's going to be a buyer's market here coming in here, especially if the prices slide sideways. So no more than 350 and 550 on those. If you're buying a secondary party. Carefully Rose, I brought 6 of the 474 gigs on Crypto World and put them on RVM. Just keep them on RVM. There you go, my dude. Yeah, you got a few different options on the 4 gig ones. You got Ravencoin. You got you could do Ergo with those. Those aren't too bad on Ergo. And then ETC. You still got that for a while too. ETC's hash rate's holding pretty good. I looked at it briefly yesterday. We got about 2 more minutes, guys, and I got to jump for another call here. But let's look at Ethereum. Thick hash rate. It has been straight steady. It hasn't moved. It's been pretty much 24 terahash this whole time. So people are definitely hedging on the fact that Ethereum Classic is going to push hard. All right, my dudes, I'm going to wrap this up. Thank you, the 250 that were able to make it onto this stream. Hopefully this was informative for you guys. And you guys like this. This is a super easy format for me to be able to bring you guys content. On Sundays, we're going to have off-topic discussions. We are changing some of the format around a little bit, having a lot of deep dives, and we're going to take you guys through our build out here locally as we're starting to source. We just ordered a new container to put 360 S19s in. We're going to be building that here locally, set up. We're going to take you guys through that. You guys definitely want to subscribe, all 250 of you. If you haven't subscribed, you're going to want to see this content. We're going to walk you guys through the entire process, partially vlog style, and then deep dives on the videos. So with a lot more statistics and data. Again, this channel thrives on observe and report. You guys observe what I'm doing, and I'm reporting it to you. It's just very linear. Here's what I've done to make things work, and then you guys come back and go, "Hey, man, you might want to change some config here and there." And it's a collaborative community. So definitely some amazing, awesome content. And then on Sundays, we'll have some kind of off-topic stuff. That's just things that we're doing in general. Some of it may go into crypto, but that's going to be kind of the channel format on just produced videos from a blog standpoint. So. Great. Glad you guys like it. And I will catch you guys on the next.